the finance world out there? Vis-a-vis, what is the people's mindset about it?
I would say nothing has really changed. People still think the same way. People still behave the same way.
Okay, what this OAWA full form stands for?
It's for Advanced Wealth Architecture.
Okay. What is that one single money habit can change somebody's life in 5 years?
I would say pay yourself first.
Welcome to your icon channel. There is another episode today with somebody whom I consider my mentor guide, and he has influenced my life in a big way on shifting the mindset. So, welcome Sujoy for our Your Icon channel. Thank you so much for accepting our request and willing to come and be part of this conversation today.
Absolutely delighted to be part of this channel, Sangeeta. I was super excited and I'm looking forward to this day today.
So, Sujoy, you had a fantastic career of last 2.5 decades, doing various things in life, in the financial field.
Now, if I ask you to decode that in last 25 years journey in one line or two lines, what is the finance world out there? Vis-a-vis, what is the people's mindset about it? How do you portray that to our audience?
Sangeeta, if I have to really decode this, I would say nothing has really changed. What was there like in the 1990s is there in the 2026 as well.
Mm-hmm.
People still think the same way. People still behave the same way. Markets have gone up and down 100 times in this period. But what was truly acknowledged, appreciated, and truly held value at those days still holds a lot of value and steam even in these days. So nothing really has changed in this last 25 years.
So with that, my next question comes. When the market crashes, 90% of the investor, I would rather say traders, who sort of start panicking. No, I want to pull out the money and I don't want to indulge in it. What is the advice for those mindset?
So this is not a very easy question, and this is something most advisors face many times in their life. Whenever there is a market downturn, we always encounter these kind of situations. Now, what is the trouble? The trouble is, whenever these things occur in our lives, the advisors also start behaving like investors. They also start thinking what an investor would have been thinking at that point in time. We also start to panic. We start to forget everything that has been taught in our textbooks. That do not look at numbers, do not look at previous charts, do not keep promising that markets will recover, and all those things. So the biggest thing that I would tell to any advisor and to those kind of mindsets is that these things are part and parcel of our journey. Investments is not for everyone. So there are two skill sets. First skill set is about how to earn money, right? So we go through our schools. Let me give you an analogy. So we go through our schools, colleges, we pick up skill sets, and all the skill sets are for earning money, right? We spend like 15 years, 16 years learning how to earn money.
Right.
We lose money or we gain money because of the mindset. The mindset is the most powerful thing which differentiates one from being an investor and from being a trader. By going through few YouTube videos along the way, sometimes we are not cut out for investments. Sometimes we need to take a step back, think through what we are getting into. Mindset is the most powerful tool that is available. We possibly have not polished it enough if these kind of situations are worrying us.
I think we have
put a very important point here, the mindset of trader versus investor. Right? I think, as you very rightly say, that 99% traders lose money. And so, for our audience, just explain in simple 2 words. Who wants to go through all the YouTube video and reel and start making investment decision for their life? Is it the right way to go through it, or this should be an investment advisor-led decision? What they should opt for and why?
People of my age and maybe people of your age would truly be worried looking at the way the youngsters are entering the market. We have thousands of people, we have lakhs of people who are entering the market as traders. I would say I'm not worried. But as long as your experiences of entering into the market is looked at as truly an experiment. If you are experimenting about your learnings in the market and just keep it as an experiment, in the process you might lose money 9 out of 10 times. As long as just a sample experiment, it's fine. I think that this is the way of life and this is the way of making money, because Time Immortal has always told us that the only way to make money in this market is one word, which is patience.
Very right.
And nothing other than patience. You might be right 5 times, you might be wrong 5 more times. But eventually, if you have the patience taught in you, you will eventually make money. And that is what all these newbie traders, sometimes we fall into a trap thinking that it's easy to make money. That's is that we spend 15 years learning a skill set to earn money, but we feel that we can manage that money by going through YouTube videos. That is not true. If you have spent 15 years building a skill to earn money, at least put in 5 years learning the skill to manage that money. Because if you manage that money well, that is when you are truly creating a legacy for yourself.
It was a brilliant done. So tell me now about OAWA. You have set up this company called OAWA. What does OAWA full form stands for?
And what
very few people outside this company actually knows this acronym. Today, maybe through this podcast of yours, many more people will get to know the acronym.
I found it very unique and I thought I'll ask you directly. So now tell me what you're trying to achieve through this initiative of yours.
So when people ask a question, in which asset class to invest? So people will naturally talk about equities, fixed income, commodities, AIF, PMS, insurance, offshore and so on. Then there is a question like, hey, but I really don't know how to invest. I really don't have somebody advising me well. Now we have wealth managers who are growing. The number of wealth managers in our country are growing at the rate of 25, 30%, 40%.
Wow, that's a big number.
That's a big number. Now imagine what we just spoke a little while back. We said we spent 15 years learning a skill to earn money, and we don't even spend 5 years learning the skill to manage the money. I'm not saying for all, but there are so many wealth managers who haven't spent even 1 year learning the skill to manage money of other people's money. So that is the role we want to, bridge at this stage, at this platform called OAWA, where we become your thinking partner.
That's my next question. Do you think the definition of this wealth will shift from the financial freedom to the time ownership?
My short answer to this question, Sangeeta, it will not shift. This was the definition. Wealth management is all about financial freedom along with owning your time. This was their time immemorial. So there is, if I look at myself, having managed public money for so many years, and I look at other people who are managing huge amount of wealth on their own or maybe third-party money, you don't want to eventually lead a life where the Sundays don't belong to you, right? You want to be absolutely in control of your financial destiny, and you also have to be in control about how you're looking to spend your time. So the definition definitely hasn't changed, Sangeeta. This was the definition of wealth management and financial freedom. Financial freedom has to come with time ownership.
If the traditional business of wealth management disappears and it's sort of replaced by the AI digital net platform, how would you redesign your business?
So I would not redesign the business, I would actually double down on it.
And how to do that?
So whenever there is a generational change in technology, while this is a generational change, this AI, advent of AI, there was a generational change when the ATMs came in for the banks. There was a generational change when Paytm came in, the way we, remit money. There was a generational change when Swiggy, Zomato also came in, because how we order and eat, how India eats food, right? It's a generational change with the advent of AI. Now, what does AI do? AI helps in analyzing huge quantum of data and information in a fraction of a second. That's fantastic. If that would have been true, that AI would have replaced our mentees, the wealth management people, then every fund manager, imagine every fund manager inside the dealing room who has an access to the Bloomberg terminal would have delivered the same performance. Access to technology guarantees availability of data churning and information. But investments is far beyond that. AI doesn't know when the fear is gripping the market. AI doesn't know when there is euphoria in the market, when there is greed, and so on. So, with the advent of AI, we would actually double down on everything that we are doing. I think the need and the challenges of wealth managers will quadruple, and that's the role OAWA will play along the way.
Wow.
So, all the wealth manager, there's a huge future waiting for you to guide and change lives of people by the guidance of platform like Beautifully Answered. Now, with that, next question, one as per you, which asset class is undervalued today for the next generation?
I don't have the easy answer for this. I will never say if you have. So let me put it this way. There are two answers to this. If you ask me the traditional answer, I will say equity. But if you're looking for the real answer, I would say the biggest asset class which is underinvested and undermined are the women investors. Now, let's look at it. Why is women investors undermined and underinvested in this? They are 50% of India's population.
Right.
So they are earning, they are saving. Why are they not the investors in the market? They are running the household so well. They have a limited budget. They are paying for the school fees and the groceries and the entertainment and recreation and all of that. And the households are running so beautifully. Why do they hesitate when it comes to investments in India? Women hesitate because they have never been told that this is a decision that you can own. The conversations at home, largely when it was investments, was male-centric. Now, the way I look at it is a little deeper in the world of psychology and emotions. Women think emotionally. Men try to be a little more analytical. They just look at data. If I show the same data to a man, the man will read it once, maybe read it twice. If they get convinced, they're going to pick up the phone and say, hey, place the trade. The women will read it once, will discuss with friends, will discuss with husband, will discuss once again, and maybe 5 days later, they will come and take a decision or might not take a decision. And we will think, the men folk will think that they are slow and they are unable to decide. It's not that. They are data backed by intelligence, backed by emotion, backed by feelings. In the management world, we call it due diligence. That is what women do. Men do not function this way. I think there are data by Fidelity research which shows that funds which are managed by women has generated at least 40 basis points higher than managed by women folk. Not just this, hold on. There are research by JP Morgan on companies which are listed on New York Stock Exchange and NASDAQ but run by women. They generate more shareholder value for their stakeholders.
So with your answer, I think one statement came very clearly why women hesitate to invest aggressively while they're earning equally. I think it's brilliantly put. So with your analysis, I will ask you the next question. Do you think inherently women make better long-term investors than the male counterpart?
I think insurance as a product is not designed for women.
And why do you think so?
Because biologically, women and men are different. The health of the women. So women, if we are truly interested to include women into the mainstream investments, then these questions and this product has to be designed by women, for women. Because men folk might not be able to even understand what they want. Women go through multiple other health challenges, maybe PCOD, hormones, menopause, and so on. Men folk might not be able to even understand those things. We speak about the average life expectancy. Women have a longer life expectancy than men. You are anyway starting your journey a little late as an investor. You end up living a little longer than men folk. Do you think even the retirement plans will work for them?
I don't.
So I don't think any of the insurance products, or maybe majority of the insurance products, majority of the retirement plans,
yes,
not designed for women.
So that's actually a huge invisible side of India which is still untapped. What do you think, which financial product today is not designed keeping women in mind, but they should do that?
So the short answer to this is that you need to start at whatever life stage you are in. So whatever age bracket you are talking, people need to start. I think the meaning of the word SIP is a little different for women. So obviously, when the markets are volatile, SIP is one of the best ways to start investing. So as a independent woman, lady investor, you should start off as early as possible and stay invested as long as you want, as you can, because we know that the last 10 years you will make the most amount of money as you keep staying invested and so on. But SIP for the women folk shouldn't be just read as systematic investment plan. It should be a systematic independence plan. So SIP, even if you start off at $500, $1,000, start off your investment plan for your own identity. So that is the message that I have for all women folk. Look at SIP as your independent identity that you are building for yourself. You are in control of your money. You are earning money. You are investing. Take the decision yourself. That is one. The second thing that I would like to say on the same note is that women like to speak about what they're doing with their friends, with their colleagues. So investment, we love to encourage women to come in as a group. You might not take the decision individually. So when the microfinance route picked up in India, microfinance was a community lending. Women investment should be a community investment mission. If we can break groups of women, come together, discuss, debate, get whatever due diligence that they need through their emotions, feelings, psychology, so be it. But bring them in a group. We would be far more powerful, and we will be able to bring in more women into the mainstream investments because of this.
Is the financial literacy really the problem, or is the financial confidence the problem? What is actually the problem?
Literacy is definitely not the problem. 1,000, YouTube channels talking about financial ways, talking about small cap, large cap, capital gains, and so on. I think too much of information, and deep down, every human being who is looking to become an investor or even thinking about becoming, we deep down know ourselves what we are capable of. So the challenge is definitely not lack of information, knowledge, and literacy from that perspective. I think challenge has been the confidence, because nobody has guided them to take the first step. So what we need in our country to get more people to enter into this market is possibly somebody holding their hand so that they get the confidence to build it first.
So, with that, my next question. Do you think social media is creating informed investor or is it misled traders?
So social media is definitely giving birth to a huge amount of information to be consumed.
So social media is definitely giving birth to a huge amount of information to be consumed. Okay, and consumption definitely gives results. So in terms of building certain confidence that I might be knowing this, but it could be little half-baked, and we might be giving birth to traders, but investors are made up of different material. So just by watching few YouTube videos, it really doesn't interest.
It doesn't really. It actually confuses you more than giving you the direction.
Yeah, maybe first you might have a beginner's luck and you make some money initial days, but once you start losing money, you get once bitten twice shy.
Exactly. Yeah.
What is that one single money habit can change somebody's life in 5 years?
I would say pay yourself first. So when we are starting investments, what do? We first pay off our EMIs.
Yes.
We pay off for our recreation, our travel, and whatever little is left, that's what we invest. If it is not left, हम लोग सोचते हैं अगली बार देखेंगे. We will look at it next time.
And that becomes 20 years in a loop.
20 years. So if we can come up with a mantra that you set aside the money to invest first, so pay yourself first rather than your Swiggy bills and Zomatos and EMIs and Netflix and so on. So maybe that works.
That is the real money shift will happen. With that, the next question, which we are going a little bit on the strategy and finance space. If you were to launch a wealth platform today, what gap would you like to solve?
In the world of wealth management, the problem is not to start the platform. The problem is to scale the platform and be the last mile connectivity of the client. Because the clients are not suffering from lack of knowledge, information, wisdom, data, and so on. But the problem truly arises when there is market volatility. So guiding a person to stay invested during the worst of the market times is the sign of a true wealth manager. So if we have to build a platform, a wealth management platform in today's times, I would say we have to be the last mile connector so that investors stay invested during the worst. Because, if I look at the market and say this is 100% of the market, 90% of the time, the market will do wonders, but there will be the last 10% which can ruin everything. The wealth management platform has to be built to help people survive that last 10%.
With that, the last question in this segment. What do you think will differentiate winners in the wealth management? Is it trust, knowledge, distribution, or technology?
If you would have asked me this question, Sangeeta, 10 years back, I would have said distribution. If you would have asked me this question 5 years back, I would have said knowledge. Since you're asking me this year, I would say it is trust, but standing on the foundation of both distribution and technology. So, coming back to your previous question, trust is the heart and soul of this wealth management business. Trust, which is supported by distribution and technology, and obviously with the groundwork of the knowledge and wisdom, would be the true parameters of success.
Okay. With this, we're coming to the rapid fire round. Are you ready? Quick answer, one word, two word, one sentence. That's it. We're going to get into rapid fire.
Let me just take away all distractions. Okay.
One investment you wish you had made it earlier.
Maybe buying a house.
One financial mistake that taught you the most.
Repaying part of my house loan.
A money habit you think is overrated.
Constant SIPs.
One sector you're bullish. One sector you're bullish on for next decade.
India as a center.
Wow. If market crash tomorrow, should we buy it, sell it, or wait it?
You should go to sleep.
Patience is a key word. One advice specifically for the woman investor.
Start today.
First best is today, second is yesterday. Wealth creation or wealth preservation, which is harder?
Preservation is hard.
Sujoy as a person has to invest between one of them. You have to choose one. Would you prefer SIP or lump sum?
Lump sum.
Equity or debt?
Both.
Gold or stocks?
Both.
If you have to choose one.
Stocks.
Risk or safety?
Risk.
Sujoy 20 years back?
Risk.
Sujoy 10 years after?
Risk.
Long term or short term gains?
Long term.
Financial freedom or luxury lifestyle?
Luxury lifestyle.
Because we already attained it. Advisor led or do it yourself?
Advisor led.
India growth story or global diversification?
Both.
Have to choose one.
Choose one. Global diversification.
Great. Well done, Sujoy. Thank you so much. It's been wonderful hosting